On a quiet morning in January 1987, Wall Street traders poured into their offices as usual. Phones rang non-stop. Ticker tapes flickered green across giant screens. Fortunes were being made every minute by men in tailored suits. But the most extraordinary trade of that year wasn't happening here. It happened 2,000 miles away. In a quiet room in Montana, a lone trader was preparing for a test of his own. One that would turn $10,000 into more than $1.3 million. His name? Larry Williams. For months, Williams had been building something different. Not based on instinct or insider tips, but a system, a mathematical weapon designed to outsmart Wall Street itself. Over the next 12 months, he would put it to the ultimate test. A return of 11,376%. A record that remains unbroken to this day. This is the story of how one man proved a single system could crush Wall Street and became the man who changed trading forever. A boy is born in the dusty cattle country of Montana. His name is Larry Williams. It's 1942, in a place where winters are long, oil refineries pump through the night, and survival depends on hard work. Miles City is small, barely 8,000 people, and yet it shapes him in ways no big city ever could. Larry's father works at the refinery. The job is tough, dangerous, and unforgiving, but it puts food on the table.
My dad worked in an oil refinery as I did in the summers.
During the summers, Larry joins him there. The clang of machinery, the smell of crude oil, the grind of long shifts. This is where he learns his first lesson. Nothing comes easy. At Billings High, Larry channels that toughness into football. He's good enough to make the all-state team. While other players obsess over drills, Larry studies plays, memorizing patterns and spotting weaknesses in the opposing team.
Most of the really good traders have an athletic or, strange enough, a musical background. But I think that an athletic background it kind of draws us to this because we're competitive.
He isn't content to just run the ball. He wants to know why the play works. His coaches say he has the instincts of someone watching the game from the press box, not the field. That habit, pulling back, looking at the system instead of just the action, is what separates him. And it won't stop on the football field. Because even then, Larry is restless. While his friends dream of staying in Montana, he's thinking bigger. So when he graduates in 1960, he leaves cowboy country behind. He heads to the University of Oregon, chasing a degree in journalism. He thinks he's going to learn how to tell stories. What he finds instead is something that will consume him for the rest of his life.
I was in college at the University of Oregon. I have my degree in journalism.
At first, Larry follows the plan. He takes classes, works toward journalism, and imagines a career in newspapers. But uni has a way of making you ask questions, and sometimes the answers can change your life. In 1962, Larry's life-changing question was born from a crash known as the Kennedy Slide. The US president had pressured steel companies to roll back prices, and almost overnight, the market collapsed. Williams didn't really understand why any of this mattered, but when he asked, he learned how one makes money on the stock market, and with minimal effort, became transfixed. Here was power, politics, and economics colliding to move billions of dollars in a single stroke. Williams wanted a piece of the pie. To better understand the markets, Larry takes an economics course. He tried it, hoping it would explain how money moves. Instead, he found it useless. Numbers and theories made no sense. He later admits he couldn't stand it.
I have no idea about economics. I took an economic class and walked out after one day. It made no sense to me.
The academic approach to the markets may not have worked for Williams, but that didn't stop the questions and desire he had to understand the numbers. Most students shrugged and went back to their classes and books. Not Larry. He couldn't stop asking questions. What makes markets bend? Who decides when they break? He didn't realize it yet, but this curiosity would become the foundation of his trading philosophy. Not just taking the game at face value, but dissecting it, searching for the hidden rules underneath. And if you're the kind of person who wants to learn the same way Larry did, to question, to dissect, and to find patterns everyone else misses that make the best decision you'll ever make. Hit that like button, subscribe, and let's keep exploring the world of trading together. Larry Williams would graduate in 1964 with his degree in journalism, but by then, the diploma no longer mattered. His real education had already begun. Years of watching the markets, charting their rhythms, and trying to understand what made them tick had consumed him. And now, he was ready to put it all on the line, to take the leap from student to trader. Fresh out of uni, Larry takes the leap. Once a dream of becoming a journalist, now replaced with a need to master the stock markets. But Williams would quickly learn that knowledge on paper is one thing, surviving as a trader is another. Like most beginners, he starts with confidence. Larry thinks he's ready, but he isn't. The market humbles him early on. Profits vanish, mistakes pile up. The thrill of winning is replaced by the sting of watching gains evaporate in a single move. Larry realizes something important. Talent alone won't cut it. He needs structure. He needs discipline. So he makes a choice most traders never do. He pays. Literally. He hires Bill Meehan, an experienced trader.
I paid Bill a lot of money to come to Carmel Valley and teach me what he knew. He'd been a former member of the Board of Trade.
It isn't cheap, but Larry isn't chasing tips. He's chasing understanding. The psychology of risk, the patience to wait, the discipline to execute. Slowly, his approach changes. He studies longer, watches patterns more carefully. He begins writing down his thoughts, building them into a trading newsletter. To outsiders, it looks obsessive. To Larry, it's survival. Every chart is a puzzle. Every fluctuation is a clue. And then comes the realization that will define his career. Markets aren't random. They move in rhythms, cycles, signals, and patterns, all hidden in the noise.
The red line that you see is an indicator I developed a long time ago to help me forecast. So this forecast in advance what should happen.
If he can decode them, he doesn't just trade, he wins. It's this mindset, part journalist, part mathematician, part detective, that leads him toward a tool no trader had ever built before. A formula scratched out by hand in the 1960s that would change technical analysis forever. The Williams percent range. By 1966, Larry hadn't been trading long. He was still a novice at best. And remember, this was before computers. Every calculation was done by hand, night after night. Larry sat at his desk in Montana, paper covered in scribbles, chasing patterns most people couldn't even see. Other traders relied on tips, instincts, or gut feelings. Larry relied on math. He wanted answers, not guesses. He wanted rules that told him exactly when to buy and when to sell. And finally, he found it. A formula that would become his signature, the Williams percent range. It was simple, but powerful. If a stock was trading near the top of its recent range, it signaled overbought, a warning that it might fall. If it was near the bottom, it flashed oversold, a sign it could rebound. For the first time, Larry had a tool that stripped emotion out of trading and replaced it with precision. That alone wouldn't have been enough to make a name for himself. But Larry didn't stop there. He was just getting started. In the years that followed, he built more tools, including the Williams VIX Fix, an indicator designed to spot fear in the market and pinpoint when prices were near their lows. 7 years of trial, error, and refinement turned into consistent profits. His charts weren't theory anymore, they were science. For Larry, it was vindication, proof his system worked. But just as his confidence peaked, reality struck. His first major test was coming, and so was his first major failure. By 1970, Larry Williams was only 28 years old, and already he had done what most traders only dream about. Using the systems he'd built, anchored by his Williams percent R indicator, he turned small bets into something staggering. His first $1 million. He'd proven that discipline and math could beat Wall Street at its own game. But markets have a way of humbling even their brightest students. Flush with success, Larry pressed his advantage. He got cocky. Williams placed aggressive short positions, bets that stocks would fall, At first, he was right. The market dipped and his profits soared. But then it snapped back, stronger, faster. And before he could cover, his gains evaporated. Almost overnight, most of that million was gone. To outsiders, it looked like a disaster. To Larry, it was something worse, a reminder that even the sharpest system can fail if you ignore timing. He'd spotted the move, but stayed in too long, and the market punished him for it. Most traders would have quit. A loss that big can end careers. But Larry didn't see an ending. He saw a lesson. Failure became fuel. Instead of retreating, he doubled down, searching for the cycles and rhythms that might explain the market itself. And that's when he uncovered something interesting, a pattern that would reshape his entire approach, a rhythm of the markets that's intertwined with the American presidency and four-year election cycles, hidden in plain sight. Alongside it, he developed new strategies, like his volatility breakout system.
Well, I had the idea, it's now very popular, of volatility breakouts. About 1982, maybe 83, I came up with the idea.
Built on the idea that sudden bursts of movement often continue. Tools that turn market chaos into opportunity, piece by piece. Larry was building an arsenal. He was no longer just a trader from Montana. He was becoming something more, a system builder. And soon, the world would see just how dangerous those systems could be. By 1987, Larry Williams had spent nearly 2 decades in the trenches. He had built his indicators, learned from his successes and failures, and sharpened his discipline. Now he was ready for the ultimate test, the World Cup Championship of futures trading. The arena where the best traders on earth went head-to-head, risking their money in a 12-month marathon. No excuses, no second chances, just pure strategy, nerves of steel, and the scoreboard. Larry entered with just $10,000, a modest stake compared to some of his rivals, but he was coming prepared with his weapons, his systems, the Williams percent range, his volatility breakout system, and his money management style were so aggressive that they terrified most traders. Month after month, competitors dropped out, bad trades, broken discipline, emotional mistakes. But Larry didn't waver. He traded like a machine. Every move precise, every risk calculated. Where others reacted, he anticipated. During the competition, something devastating happened to the markets. A dramatic sell-off of stocks on the New York Stock Exchange left the Dow Jones plunging 508 points. This was catastrophic for some traders, resulting in millions of dollars worth of losses. Williams didn't exit the day unscathed, but he was in far better shape than many others. Why? His systems. They'd allowed him to know how to respond to the crisis to minimize the fallout. For that, he won, even if he lost a little in the victory. As the competition carried on, Williams' account exploded. Tens of thousands, hundreds of thousands, until finally, when the competition ended, the scoreboard showed a number no one believed possible. From just $10,000, Larry had made $1.376 million, an 11,376% return, a record that still stands. For the first time, the wider world saw what Larry had been building all those years. Everyone wanted to know Williams and his methods for success. But behind the victory was something even more powerful. A story. A small-town kid had walked into the arena of giants and left as a legend. After 1987, Larry Williams could have disappeared into wealth. He could have left the markets behind. Another one-hit wonder, remembered only for a record-setting victory. But he didn't. Instead, he turned outward. He began to teach. Larry launched seminars, wrote books, and shared his indicators with traders worldwide. The Williams percent range became a standard tool. His message was simple. Trading didn't have to be chaos. With a system, with discipline, anyone could take control. And then came 1997, a decade after Larry's incredible win. His daughter Michelle entered the same World Cup Championship.
I said, look, Michelle, just tell the broker, Gene, to follow the system. An automatic bond trading strategy that we had subscribers to, and you tell them to trade one contract for every $10,000. And she did. And she just followed the strategy. That's all she did. In 7, she turned $10,000 to $110,000.
She was just 17 years old. Using the methods her father taught her, she achieved a 1,000% return. It proved that the Williams way was the best way to trade. It was unprecedented. A father and daughter, both champions. If you need proof that Williams' systems worked, this was it. It was teachable. You just had to be willing to learn. And Michelle wouldn't be his only student to go on and find success. Over the years, several of Larry's students would go on to win the World Cup themselves. Williams' methods were now anyone's methods. But at the core of it all was the legend himself. He'd spent decades developing his way, and he was willing to share it so anyone could find success trading. He had proven that an ordinary kid from the middle of nowhere could change trading forever. Now he wanted to prove something even greater, that anyone could. But success has a price, and for Larry Williams, it wasn't the markets that came for him, it was the government. In 2006, nearly 2 decades after his legendary win, Williams was indicted on tax fraud charges. The accusation? That he had hidden income through offshore accounts and complicated trusts.
I was charged with income tax evasion, fraud, multiple bank accounts, all sorts of really bad things. That I defrauded the government, that I was a really bad guy.
For a man whose reputation was built on discipline and precision, it was a devastating blow. The case quickly grew messy. By then, Larry was living in Australia, triggering an extradition battle that played out in courtrooms halfway around the world. And then came another shock. His longtime secretary, someone he trusted, had embezzled nearly $1 million and handed over fraudulent records to his accountant. Those errors became part of the evidence against him. Larry's defense argued he was guilty of something else entirely. Not fraud, but faith. He genuinely believed the structures he used were legal. His attorney told the jury, Larry Williams was crazy. Not crazy in the sense that he was insane, but crazy in the sense that he believed things that were simply wrong. If he believes in good faith, he's not guilty of the crime of tax evasion. As the trial dragged on, the government's case weakened. Witnesses admitted his losses might have been legitimate deductions. Eventually, prosecutors offered him a deal. Drop the felony charges if he pleaded guilty to a misdemeanor. He accepted. The fight had cost him money, time, and peace. But in the end, it didn't take away what mattered. His indicators still worked. His students still traded. His legacy was intact. Williams' battle with the IRS didn't ruin him financially, but it consumed his time, which was far more valuable. It was a costly, painful interruption, but not the end of his career. Today, Larry Williams is in his 80s. He's still trading, writing, and teaching future traders, looking for the next Larry Williams. Decades after his record-shattering run, he hasn't walked away from the markets. What started as a way to make money became a passion. It became a challenge to prove that with the right systems and discipline, there was order and patterns in the numbers. Over the years, Larry has enjoyed many titles: trader, author, mentor, even political candidate in his home state of Montana. But his greatest title may be the one that can't be printed on a ballot or bank statement: the man who showed that ordinary people could take on Wall Street and win. His legacy is about more than money, systems, and record wins. Larry Williams took the lessons of a refinery town, grit, patience, toughness, and carried them all the way to the world stage. From Montana to Wall Street, from failure to triumph, from million-dollar losses to unbreakable records, he proved one thing above all: trading isn't about luck. It isn't about instinct. It's about building something that lasts. And that's why Larry Williams truly is the man who changed trading forever.